All right, what is going on, guys? Hope you're all ready for the weekend. You know, it's Friday. What a beautiful day it was today, and what a green day it was for the markets. As you can tell by the topic of this video, the main focal point is going to be covering Intel stock, doing a little deep dive on their earnings, and everything that this means for your money and the CPU and memory market primarily. Some major interesting things I saw on the earnings call in particular and the webcast was the CEO made a lot of interesting comments about the HBM market, high bandwidth memory, NAND storage, kind of got a little thrown into there. Not overtly, but indirectly being affected by the HBM shortage will cause NAND storage as well to increase. One of my big catalysts as well for the market is those two. Also causing ARM and AMD to shoot up like crazy, mentioning heavy pushes towards agentic AI and inference. Something I've been calling for a while now. So not only is Intel preparing for the future, but these other companies are as well, and I think investors are slowly starting to realize that. Thus the reason why not only the SPY went up 57 points on the day, but also if we take a look at the charts here, Intel was actually up 30% in the pre-market, but it finished up on a great day, up 24%, just under. AMD went up 14% and ARM went up 15%. So it was a crazy day for those three in particular. Also, let me just go back here. SanDisk, the NAND company, was up 6% indirectly, getting mentioned through there. And this RAM ETF was up 2.3%. Very strong day for all five of these companies. I'm going to get right into it now just to, I value you guys' time, so I just want to jump right into it. So firstly, the CEO was mentioning how, Intel about 2 years ago was just a company that was just trying to survive. Now, in quarter one of 2026, they just had blowout earnings. And I'm not talking just, it was just blowout earnings. It was absolutely volcanic eruption earnings. They had non-GAAP EPS of 29 cents against 1 cent expected. That's not only a beat, guys. That's a 29x to their bottom line. So I'm just going to pull this up for you guys here. I believe it is somewhere here. This is just their slideshow they had. This is their earnings deck. For everything. So they have all their numbers here. If you guys want to go check it out, it's on their investors page. You just go here, click, earnings presentation. So that's how I pulled this up here. I'm going to be referencing to this the entire video. Here's the part that matters way more than Intel itself. Intel's data center and AI revenue grew by 22% year over year to 5.1 billion. Wall Street was expecting 4.4 billion. So they beat by 7 billion. That's a huge, 700 million. That's a very huge beat. The CPU memory Supercycle is 100% real, and I'm not just saying this, it is 100% real for all of these companies. It's not only, just starting to get noticed, it's actually accelerating. And it's going to drive every major chip and memory stock for the next 3 to 5 years up exponentially, in my humble opinion. Today, we're just going to be breaking down Intel's print, connecting it to the memory thesis I've been covering for a while on here, and kind of showing you specific names that will benefit just up here on screen, as well as this ETF that I really think will give you a lot of great exposure. Now, let's start with Intel and what they actually reported, because these numbers are genuinely wild, guys, and I want you guys to understand this. So Q1 2026 revenue was $13.6 billion versus $12.36 billion expected. Non-GAAP EPS was 29 cents versus 1 cent expected. That's more than double from 13 cents from Q1 2025. So they are making great strides forward. The operating margin expanded from 13.9% to 30.5% year over year. And the Q2 guidance, they actually beat and raised. So it was from 13.8 revised to 14.8 billion versus 13.03 billion expected. So that range, they're expecting about 13.8 to 14.8 billion, in the range of 1 billion, where the street was expecting 13.03. So that's a very big beat and raise. They had 6 consecutive quarters of revenue above expectations. This is the 6th straight beat for Intel, and the CFO, David Zissner, sorry if I mispronounced that name, he called it an unprecedented demand for their silicon products. Let me put that 22% data center growth into context for you guys so we can really understand the validity of what that actually means. Intel is growing this segment in single digits as recently as Q4 2025. It wasn't really accelerating that much. Now it's accelerating at over a 20% pace. When a $5 billion quarterly business accelerates that fast, something structurally is happening and there's a big shift. And I'm going to show you exactly what that is. All right, guys. Here's a quote from the Intel CEO, Lip Bu-Tan, that every tech investor needs to hear this, okay? The next wave of AI, and this is quoting word for word, the next wave of AI will bring intelligence closer to the end user, moving from foundational models to inference to agentic. This shift is significantly increasing the need for Intel CPUs and wafer and advanced packaging offers. So translating that corporate speak into, plain English, all of us will understand. Basically what he's saying is that there are three main phases. The first phase was training. This was 2022 to 2024. Absolutely dominated. You take, trillions of parameters and you train them. Okay, this is how we got Claude. This is how we got Grok, Gemini, ChatGPT. And this workload is almost entirely GPU dominated, okay? Almost entirely GPU dominated. That's why we see companies, NVIDIA, just really eating these phases for breakfast, okay? Because GPUs was so in demand, NVIDIA shot up so much. I don't know if you guys remember, but they were just constantly beating and raising. It was absolutely insanity. The second phase is going to be inference, and this one is going to be extremely important for companies like ARM and AMD, which are competitors in this space, but will all benefit because there's all going to be winners regardless. You deploy the trained model to serve real users. So after you train it, you deploy it. ChatGPT, answering questions, Mid-Journey generating images, or these other softwares being able to do that. It's still GPU heavy, but CPUs start playing a bigger coordinational role in this. And the third phase is the agentic AI. This is the last and final phase, okay? Now, it's happening in 2026 and forward, okay? So we're starting to see it starting, AI agents that, just don't answer, they take actions, okay? They browse websites, they search spreadsheets, they chain together, multiple steps for the user, and they orchestrate other AI systems. We're seeing this slowly getting implemented, okay? Now I want to talk about agentic AI being CPU intensive and not GPU intensive, because this is extremely important for both these three companies as well as memory companies, okay? Why? You may ask. It's because agents, they spend most of their time, their compute time on orchestration, decision-making, data retrieval, and coordination, okay? All of which are general purpose compute tasks that CPUs are primarily designed for, okay? The GPU handles, the AI inference step and the training step, but the CPU handles literally everything around it. The company TrendForce reported that CPU to GPU ratio in AI data centers is shifting from 1.4 or 1.8 today. So you have, for every one CPU in today's world in the data centers, or for every one CPU, you'd require about 8 or 4 GPUs. That is shifting towards 1-to-1 or even 1-to-2 by 2027. So really think about that, how this can drive demand for these three companies. And that's why we're seeing so much money getting poured into them. If we're looking at AMD, they've been around for years. And I was shocked about this when I actually kind of, put my head down and realized that their market cap is only 560 billion. Even ARMS, their market cap is only 200 billion. And they have they have their CPU architecture in almost every single company. I imagine all my viewers right now have a phone, have a laptop. That more than likely, I'm 99% sure ARM's architecture is running the brains behind the CPU that you use in your technology in everyday life. And ARM has recently announced about a month or two ago that they're going to be expanding into not only licensing their architecture, but they're going to be making their own CPUs. And they're only a $200 billion market cap company. I think they can double, potentially even triple. And AMD, I wouldn't be surprised if they hit 500 a share by the end of the year, potentially 600. Remember that deal OpenAI and Meta made? To get the company to $600, they're going to take, I believe, 10 or 20% of that company. They are all incentivized to get it to that point. And Lisa Su will get a $75 million pay package. So she's obviously incentivized to get it to that point. Intel really saw this coming. So did AMD. And now it's showing up in the numbers because they prepared for the future as smart as possible. I next want to talk about the supply side and how it's broken. So I have this little Substack image here from the AI semiconductor value chain. Okay. So really just want you to look at the companies. They're all familiar companies and kind of what they do. Here is what makes my thesis so powerful, that the demand is exploding at exactly the moment the supply is constrained, okay? So Intel's own chief financial officer, they told investors on the call, and I'm quoting, that demand is still outstripping supply, and the company will continue to ramp up supply each quarter. They acknowledge that they just can't keep up with the supply, or the demand rather. It is outpacing the supply at a very high rate. The AMD has server CPU lead times of 8 to 10 weeks. Okay, Intel has extended Xeon delays to customers, particularly in China. KeyBank reports that 2026 server CPU capacity is virtually sold out. Okay, across both companies. Some high-end SKUs have lead times exceeding 6 months. Both companies, they've all raised their prices in quarter one 2026 because of this. They're raising their prices. I don't know if you guys heard the exact number. AMD is projecting to raise their prices at the second half of the year by 15%, and so is AMD. They are raising the prices for their CPUs. Very much similar to my video I dropped yesterday regarding high bandwidth memory. These individuals that are buying their stocks, they are not only they're not only buying the products like CPUs and memory, they're willing to pay any price for it. They are absolutely desperate. So it is a seller's market. And the difference with CPUs and high bandwidth memory is that CPU companies, they have the edge in being able to set the prices. Those high bandwidth memory companies don't, but that's not really that as effective because, if the supply is really constrained, they can control the supply, kind of, being able to finagle and control the price themselves. All right. In the first quarter, I mentioned they're going to be raising their prices. Some sources actually expect 30% price hikes across 2026 and near the year end, as both Intel and AMD and ARM try to navigate the very tight supply. Okay, this isn't just normal cyclical shortage. This is structural, very similar to the memory one. It's it could be structurally the same, but fundamentally these super cycles are different. That's what I'm calling an AI super cycle we're in. Okay, and it's going to last multiple years for 4 reasons. Firstly, new wafer capacity takes 2 to 3 years to build, which is the materials used to create the semiconductors and all those other parts that are related to them. The second one, advanced packaging capacity, so CoWoS, primarily used by TSM, is also constrained, and also something that's very interesting. Other companies in this substack that are packaging right here, like I think a big winner can be Intel. A big edge they have in this space over the other two companies is that they have the ability to be a foundry. They fabricate their own chips, and they also package their own, their own chips too, which is very, very interesting to think about it. I think a big winner here can be Amkar. TSMC in their past earnings report stated that they're almost full capacity. And once something gets full capacity, remember, they do all 9 yards. They package, they fabricate, they test, they do all these kind of things. Actually, I'm not too sure about the testing part, but they do a lot of things, and they create the chips too. Once it reaches full capacity, it requires other players to step in and potentially gain market share, which is, I think, Amkar Technologies. So I think you guys should look into that company too. Remember, do your own research. And once again, I just want to reiterate, I know you guys see in the description, but this is not a solicitation. This is not financial advice, just to be fully disclosing that. This is not personalized. How can it be? I don't know your personalized situation. The third thing here that I want to talk about, both Intel and AMD are prioritizing server over consumer, creating, huge shortages. The fourth thing, and the final one for this part, is that every major hyperscaler is buying forward to secure allocation. They're literally booking these guys out year over year. I believe they're all booked out for 26, and they're going to be booked out for all of 27. 2028, that might be a little too far down the line. I don't have the information on that, but I know for the next year, they're literally going to be booked out very soon, because that's how it is for the memory companies as well. These guys are willing to pay whatever it takes to get these products. They're desperate. They need to build out and be the first ones there. So these guys have absolute pricing power. Now I'm going to talk about the main connection between CPU and HBM. Here's where things, get really, really interesting for these companies here, including NAND companies. The CPU shortage and the APM shortage, or the HBM shortage, are not separate stories. They are the same side of the same coin. Or, sorry, different sides of the same coin, rather. And here's why. Every AI server, they need CPUs, they need GPUs, and memory especially. And as CPU demand accelerates, every incremental CPU shipped requires the same amount in corresponding memory. And that memory is high bandwidth memory, high bandwidth flash, which is exactly what SanDisk is going to be creating, and high capacity server DRAM, which is exactly what this ETF gives you exposure to. Now let's look at the memory side. So I just did a whole video on SK Hynix and how they just reported record-breaking operational margin. That's higher than TSMC. A record-breaking revenue at 52.58 trillion won, which is the Korean currency, and operating profit of 37.6 trillion won. And that company said on the call that, quote for quote, customers are prioritizing procurement over price. TrendForce data shows that DRAM contract prices are going to be growing 70% year over year, according to TrendForce. So Micron executives have described the memory shortage as unprecedented. HBM capacity is fully sold out through 26 across all three of the main players, that being SK Hynix, Micron, and Samsung. If you want a deeper dive, please watch my last two videos rather. And, the SK Group chairman himself said that, wafer shortage is likely to persist until 2030, ladies and gentlemen. 2030. I was being, extremely bullish, saying 2080, oh my God, 2028. Imagine if it goes till 2030. That would be absolutely nuts. And they also projecting a 20+% shortfall in supply versus demand in that period. Yeah, it's absolutely insane. And I don't believe it's just, not one of these theses. I think everything that I covered, they all converge together. The CPU shortage, GPU demand, HBM, supercycle, and extreme NAND tightness that they all need for these AI data centers in the build-out. Now I'm going to talk about three main catalysts that I picked up on from the Intel investors call. So the first one is going to be a Google multi-year deal. Intel announced a multi-year arrangement with Google Cloud that will see that will see their Xeon CPUs power AI inference and other workloads for Google Cloud. This is a massive customer win for Intel, and Google, is one of the top three cloud buyers in the world, the three being Amazon, Microsoft, and Google. So the second catalyst is going to be the Apollo buyback. This one's very interesting. Intel announced it will repurchase the 49% stake in its Arizona fab that is sold to Apollo in 2024 for $11.2 billion, buying it back for $14.2 billion. That's a $3 billion premium to reclaim their foundry independence. What does this signal, guys? If they are paying $3 billion in a premium to reclaim that foundry, this signals Intel has strong conviction in the manufacturing turnaround for their company. And the third catalyst that I'd love to do a separate video on and talk about for hours, but I don't want to do that right now. I value your guys' time, is going to be the Musk's Terafab, Elon Musk's XAI and SpaceX IPO and his Terafab. Intel announced it will work with Elon on the planned Terafab facility. Okay. This is going to be producing chips for SpaceX, XAI, and Tesla, which honestly, in my opinion, guys, I think, I really do believe Elon is just going to buy Tesla out if it gets too cheap, but that's a topic for another video. This kind of just, plants Intel squarely in the AI ecosystem and the empire that Musk is going to be building with his three companies, SpaceX, XAI, and Tesla. The 18A foundry process, which is Intel's next generation manufacturing node, is shipping in the Core Ultra Series 3 currently, with Xeon 6 Plus data center processors starting in March. Okay, so this is taking great strides forward. For the first time in years, ladies and gentlemen, Intel's story has multiple genuine tailwinds firing at once. This company is literally firing on all cylinders as of today. This is literally why it's a no-brainer for this stock to be at all-time highs, which it absolutely is deserving to be at. So now, the part you guys have all been waiting for. What does this mean for the stocks I've been talking about, okay? I'm going to walk you through specific names that will benefit from this thesis, okay? The first three I'm going to be talking about are all CPU intensive. So we have Intel, primarily. Intel is going to be the primary beneficiary of the Intel print itself, obviously, just up over 100% year to date. Data center acceleration, plus the foundry edge, the ability for them to, fabricate their own chips. Not many companies on this planet are able to fabricate. There's three main, I guess, Intel, TSMC, and Samsung. And also the ability to, create have their own chip designing as well. And packaging. So these guys are doing the full 9 yards. Also, please, guys, pay attention to the 18A ramp up and external foundry customer announcements through 2026. One thing I found very interesting, Lip Bhutan, the CEO of Intel, he was not wanting to mention a specific customer that they had signed because the customer wanted to keep it disclosed. Now, I will tell you guys, if it is Anthropic or if it is Google or if it is a huge hyperscaler by any means necessary, this stock is going to be sent through the effing roof. I just want you guys to know that. Next stock I want to talk about that is going to be a huge beneficiary. You guys know it's my baby, AMD. Probably the cleaner pure play on the CPU shortage thesis in my humble opinion. They have EPYC dominance in, hyperscaler deployments. They have a rising GPU business with their MI450s coming out or having out, and the Meta and OpenAI deals already announced. That's to incentivize them to get their stock to $600. If Intel is beating on CPU demand, which they are, I believe currently the market share split is 70 or 65%, something around those lines. Intel, AMD is 20, and then ARM has the rest. So it's a pretty deep split. So Intel can actually potentially give up some market share to AMD and ARM, which I would not even be surprised about. But if they are beating on CPU demand, AMD, who holds the number one server CPU position with hyperscalers, should benefit, relatively the same. Next, I want to talk about is ARM Holdings. This one is also interesting, and I'd love to, get more exposure to this company. This is a very different angle to take. ARM is a based CPUs. They're 100% CPU pure play company and are now over 21% of all server shipments globally and approaching 50% in hyperscale data centers. ARM's V9 royalty rates are nearly double V8, meaning their architecture that they implement into Apple iPhones, MacBooks, computers, all that type of stuff. But ARM trades at over 70x forward earnings. So the thesis is right. The valuation could be stretched potentially for ARM. I want you guys to keep that in mind. I think end of year, if you guys are a long-term investor, it doesn't necessarily matter. But if you're short-term, kind of looking at options plays, that could be something to keep in mind. Now I want to talk about my favorite sector, which is going to be the memory plays. So we got SanDisk, Micron, and SK Hynix I'm going to talk about mainly. So for SK Hynix, they're a very dominant HBM player, obviously. They own 62% of the market share and they're most levered to AI memory demand, which is going to send it up big, in my humble opinion. The next one is kind of very similar. I'm going to keep it short because I covered it, twice already. But Micron, it's the biggest U.S. listed HBM creator, so it's a huge North American pure play for memory. If you want to play that shortage, and they have the smallest HBM share of the big three, but potentially the most share upside. And the big three obviously mentioned is SK Hynix, Micron, and Samsung. Now I want to talk about SanDisk, ladies and gentlemen. I absolutely love this company here. Let me just pull this up because I do like the UI a little better on CNBC. But yes, so SanDisk, they have great NAND and high bandwidth flash exposure. They're already up, 30x from its post spin-off low. So the easy money is gone, as we know. But this is where millionaires get made, finding the diamonds in the rough here when they think it's overvalued, but stocks continue to go up. But I still believe this high bandwidth flash is going to really reshape the entire world and how the AI data centers are utilized. Now, I understand this is an interesting idea as an investor, but I don't want to, say this without having a potentially contradicting opinion. So I want to give you guys the honest risks. I'm not going to skip this part because I do believe credibility matters, and I want to give you guys the full picture. Because I'm not here to pump bags. I'm here to talk about both sides, and that's how investors are made. We're not traders. We're investors. All right. All right, guys, so the first risk is going to be that expectations are now extremely high. Intel's up over about 100% year to date. SK Hynix is up about 80+%. These aren't hidden stocks anymore, right, guys? So the CPU and the NAND and the memory companies are not hidden. The whole market knows about this thesis. That just means, beats for these earnings need to be blowout to sustain the rally. Any estimates and disappointments that aren't in line, can really hit hard. We saw this with Microsoft in January when Azure growth came in line, and CapEx jumped, which caused the stock to drop, 10%. So really keep that in mind, ladies and gentlemen. The second risk here, I think this is the most immaterial risk in my opinion. I think it has the least likelihood of happening, but it's if the hyperscaler, CapEx pullback happens. And that's under the impression that, Meta, Microsoft, Google, and Amazon, they're going to stop talking about CapEx up until 2027, when in my opinion, I think they're going to be continuously spending up and all the way up, because this is the future. Risk 3, in my opinion, is probably the most material one. It's the eventual oversupply for both CPUs and high bandwidth memory. The whole thesis is that I believe it's going to happen later. I think we're entering this AI supercycle. What the market is kind of believing, but slowly shifting towards now, as we can see, because these companies are just getting higher and higher and higher. It's clear they believe something else different than the thesis that we've been taught. That, it might extend into 28 or 2029. So the eventual oversupply is a lot farther than we think. It's not a current 2026 problem. It's more of a 2028 problem. But it is coming eventually. The fourth risk is also, geopolitics. This war in Iran is causing oil to continue higher. It just was above 105 for the day. At the time of this recording, the Strait of Hormuz is still closed. The Iran situation is still extremely active. And, any escalation can really wipe 10 to 15% off of the entire market, especially high risk, high beta tech. So keep that in mind. The fifth risk is going to be Intel's foundry. If they, as we know, they've been struggling as a company for a while before this. Interesting enough, they have partnered with, Terafab, with, XAI, with Elon Musk and this empire he's building to kind of build out Intel's foundry and be able to fabricate their own chips. Now, their foundry has been kind of doo-doo over the past few years. So if they're able to really ramp this up with Elon Musk's expertise and his infinite money, I think, and if they show that this is able to happen, I think this is going to be very material for the entire AI super cycle. And it's going to push the demand and the supply higher for both, which is going to cause all these stocks to rip. Absolutely. So that's another risk if they are unable to implement it correctly. The next one is also China exposure. Both Intel and AMD have very meaningful China data center exposure. Any new export restrictions or China commentary on the next earnings call could hit both names. So please watch AMD's May 5th print for any China softness in the commentary. Now, this is kind of like my bottom line for this entire thesis here. There's 5 main points I made. So the first one is going to be CPUs. They're becoming essential for agentic AI. Server CPU supply is structurally short across both major CPU scalers and high bandwidth memory scalers. The shortage cascades into memory and NAND. The whole chip and memory supply chain is capacity constrained until 2027, guaranteed, and I believe it's going to go longer. And fifth is that pricing power is accelerating and not peaking. We're seeing these hyperscalers continuously buying the products and willing to care or not care at all about the price they're paying because they're so desperate for it. There's a single line from Intel's call that Lip Bhutan said that really resonated with me, and I wrote it down immediately. It said, the CPU is reinserting itself as the indispensable foundation of the AI era. This isn't the NVIDIA story anymore. This is the supply chain story. And every company that makes the physical infrastructure, whether it be CPUs, GPUs, memory, advanced packaging, they're all going to benefit from multi-year capacity squeeze. Okay. If this was useful, ladies and gentlemen, please smash that like button, subscribe for more earnings breakdowns, and drop a comment with what you're watching going into, Microsoft and AMD next week. It's going to be very interesting. I'm going to be covering those stocks before earnings, and, please let me know in the comments if there's anything you guys want me to talk about. Also, guys, I'm very excited to announce I'm going to be releasing my daily trade wire very, very soon. I'm going to get it up and going. It's going to be free for everyone. And I'm going to be posting, daily macro, micro, technical, and fundamental analysis of markets, stocks. I'm going to be including, key levels you can look at for liquidity on companies. For instance, as you guys can see on my screen here, I've charted out, 232 lines, 198, 266, 286. These are very heavy points of liquidity. As you can see, a lot of the times they bounce off these lines. It's very, entry points, So if that's something you're interested in, I would recommend without a hesitation. It's free. It's no risk to you. I put a lot of work into this, so I hope you guys, can give me a chance in it. Hopefully you guys learned something from it, which I know you will. And yeah, guys, it's going to be coming out very shortly. It's going to be called the Daily Trade Wire. So yeah, I'm going to be giving out, macro, micro plays in the entire market, as well as stock picks for the day that I think can be material for that day and can go up. Anyways, guys, if that's something you're interested, leave a comment about that. Smash a like on this video. Take care, guys. And once again, stay safe. Have a beautiful weekend. God bless, guys.